Well, good morning, Jaginder Rana here. The topic for our discussion today is erection, erection or risk insurance. Erection or risk insurance. See, erection or risk insurance is the branch of engineering insurance. And engineering insurance refers to the insurance that provides economic safeguard to the risk faced by the ongoing construction project, installation project, machines and equipments in project operation. So engineering insurance is a type of insurance policy wherein a wide range of risks related to engineering are covered. It's a comprehensive insurance policy that offers economic safeguard against risk faced by ongoing construction project, installation project and machines and equipments in project operations. Since the industry is about creating and designing construction and building, there are increased chances of related accidents and perils. Thus, engineering insurance policy caters to different forms of uncertainties that are associated with on-site construction, including plant and machinery uses. India is among the fastest growing economies in the world. So with an upbeat towards rapid infrastructural development in railway, industrial units, housing facilities, dam, flyover, power plants and other such construction projects, they are on the rise. So ER policy is required because with the rise in the infrastructural projects comes with the rise in material risk. The possibility of damage to the construction materials, machinery or constructed portion due to environmental and man-made hazard can lead to substantial losses for the contractors. So two types of engineering policies are there, annual and long-term. Annual policies include CPM, EEI, MBD, and BPP. Long-term policies include CR and EAR. If we go on the basis of the phases, that is construction phase and operation phase, more or less similar kind of policies you will find, like CAR, MC, ALOP or DSU in the construction phase, and MBD, BPP, MLOP, CPM, CCR, EI, DOS in the operation phase. So as far as period of cover is concerned, the cover shall commence from the commencement of the work on arrival of first consignment at the project site, whichever is earlier. So to cover expires when the completed part thereof is taken over or put into service, or the dates specified in the policy, whichever is earlier. In case the work is not completed within the period specified in the policy, then the policy can be extended but not renewed. The determining factor of CR versus ER is value of erection and installation work. If erection value is above 50% of the total cost of the project, then the ER policy is given. And if the civil construction value is more than 50%, then the CR policy is given. In majority of proposals, there will be risk inspection by insurance companies engineers. Duty of utmost good faith applies, hence proposer has to declare all material information. Policies can be issued in the joint names of two or more parties, that is principal, contractor, subcontractor. Almost all classes of engineering insurance are controlled by tariffs, which prescribes a standardized proposal and policy wordings. The sum insured is adjustable at completion of the construction on the basis of the actual cost. So this ER policy is applied to all risks located in India, for which the value of civil erection work is involved is more than 50% of the total contract value. So principal contractor, subcontractor can take it. If the civil part of contributes more than 50% of the total project cost, then CR policy, otherwise ER policy. So for example, installation of a stone crusher plant, what policy is important, that is to be seen. Two sections are there in the policy: material damage and third party. Material damage section covers the loss or damage or destruction by any cause unless until specifically excluded. Third party liability section provides for loss or damage or destruction by any cause to the third party. Period of cover is important to understand because cover shall commence from the arrival of first consignment at the project site. The cover expires when the completed part therefore is taken over by or put into service or the date is specified in the policy whichever is earlier. In case the work is not completed within the period specified in the policy, then the policy can be extended. Sum insured of the policy includes marine imports, landed cost at site, marine indigenous landed cost at site, cost of erection, permanent civil engineering works, half the escalated value if escalation is opted for. Policy does not cover willful act or willful negligence of the insured. Loss discovered only at the time of taking an inventory. Loss or damage due to faulty design, defective material or casting, bad workmanship other than fault in erection. Consequential loss of any kind such as penalty for delay, non-fulfillment of terms of contract. The cost necessary for rectification or correction of any error, and the bodily injury to the workmen, because the same is covered under the workman compensation insurance. Policy also provides certain add-on covers which are voluntary as per the option of the insured. These add-on covers differs company to company, but most common are third-party liability surrounding property of insured, escalation, removal of debris, CPM and maintenance. So here the important question is, because this cover is applicable to both the sections, that is material damage or third party section. Now policy is always policy. So the target segment of this policy are government contractors involved in government projects like road construction, bridge construction or building construction, builders and developers. Policy can be taken by principals, contractors or subcontractors. This policy applies to all risks located in India for which the value of the civil work is less than 50% and erection work is more than 50%. The important thing is, majority of proposals the risk is inspected by the company engineers. Policy also provides important clauses like 50-50 clause and 72-hour clause, but these clauses are available on the option of the insured, because 72-hour clause covers the liability as per the provisions of the clause, both 50-50 and 72 hours, but they are not inbuilt part of the policy. They are available only on the option. Most of the contractors are aware that they need these clauses, so they are normally preferring to opt for these clauses. There are certain images of the kind of losses in the projects the companies are suffering when the erection part is going on, because erection is one thing which can suffer at any stage till the project is handed over, delivered or put into the operation. So the risk coverage is necessary. Either the principal takes it, contractor takes it or subcontractor takes it. So policy is most important for the project insurance where the erection part is maximum. Thank you very much.